Hello and welcome to Creating the Customer Journey of Tomorrow, Unlocking the Customer Innovation that Open Banking offers. So my name's Louise Beaumont. I am going to be chairing today's proceedings. I do three things. I work with legislators and regulators to create disruption. I work with incumbents to help them cope with that disruption, and I invest in and take board and advisory positions with the startups that I think just might be able to exploit disruption. So I'm very interested in disruption. There's a lot of it about, and I'm sure it's going to come up today. But let's get back to business. Today's fun-filled feast starts with a couple of demos by Chris Michael, who's the Implementation Entity's Head of Technology, followed by a rousing, rollicking panel discussion. Now, obviously, I've got some questions ready to fire at the panel, but I want to pose your questions too. So ask away in the chat function, and I shall try to get you answers. So, Chris, over to you for 10 Earth minutes, please, of demo delights. Chris.
As Louise said, I'm the head of technology at OBIE, and my prime role has been developing the standards for open banking in the UK. And when we started this journey a few years ago now, 3.5 years ago, it was quite interesting, quite tough, quite a tough challenge. The first sort of iteration of open banking when it went live was somewhat lacking in terms of customer experience. There was significant extra friction in the journeys, and the banks hadn't implemented a good experience when it comes to authenticating the customer. So, for example, they had not allowed customers to use their mobile banking apps to authenticate, to give access to a third party. And as we all know, the predominant method that many of us use now to access our bank accounts is a mobile app, and we don't even remember or typically use a username and password anymore. We use our biometrics, and so the fact that wasn't in place was with the first iteration of open banking was somewhat problematic. That resulted in customers having to remember usernames and passwords, go to a sort of walled garden experience to authenticate. And the banks had also put in place quite a lot of additional confirmation steps and screens in many cases. So it was clunky. There were other issues with availability and performance, etc., which were kind of well documented at the time. And one of the things that we did in the UK is in terms of the standards, we if you like, upgraded or enhanced the standards to include something called customer experience guidelines and something called operational guidelines. So the customer experience guidelines defined what banks should or shouldn't do in terms of the authentication journeys, and the operational guidelines set sort of benchmarks, if you like, for things like availability, performance, dealing with issues, etc. And the combination of that and a continued sort of, I suppose, pressure from every angle has resulted in a real step change over the last couple of years in terms of the quality of these APIs. And I think it's safe to say there's still some work to do, but what we're seeing now, particularly in the UK, is a really good journey in many cases. And key to that has been something that we call app to app. So this is where a third-party application can redirect a customer to their mobile banking app, so the customer uses a banking app that they've already got on their device that they're used to, and uses their biometrics to authenticate. So I'm going to show you a couple of examples of that, but effectively what this step change has enabled is significant volume of third parties that are now coming into the market. We've seen across the CMA 9 alone, the 9 biggest retail banks in the UK, we've seen a total now since 2018, over the last 2 years pretty much, we've seen a total of over 3 billion API calls across the CMA 9. I can't give you an exact figure on customers, but we've seen well over 1 million customers. In fact, we hit the bench, we hit that level of over 1 million customers back in end of December last year. So it's significantly higher than that now. And these are customers who are using open banking, not necessarily all on a daily basis, but using it for a number of use cases. We've got hundreds of firms now in the UK ecosystem, both banks, regulated third parties, and also technical service providers. So it's been a really vibrant sort of growth, and we've really got sort of interesting use cases starting to take off now. And I think that growth has been largely attributed to this step change that I spoke about in terms of customer experience. So I'm going to give you two examples of that. The first example is account information. So this example is QuickBooks, a well-known cloud accounting package, connecting to Tide, which is a mobile business banking proposition. So what I'm going to show you is this decoupled flow, which shows that a customer starts their journey on a desktop application in QuickBooks, and the customer wants to give access to a banking proposition, but the bank is on a mobile bank. So if I just share the screen, so this demonstration here, I'm going to start with I'm in QuickBooks, and I'm going to connect my bank account. I'm going to choose Tide as the bank account. I'm going to agree with the consent. I'm going to authenticate. I scan the QR code on my banking app, which you can't see, but I choose which account I'm going to give access to and for how long. Tide is now being granted access. So QuickBooks has now been granted access to my Tide bank account. QuickBooks is now pulling the data from my bank account, and my QuickBooks application has now got access to my Tide bank account. So you see that entire process took under a minute. There was no entry of usernames and passwords, and it allowed me to authenticate. What you couldn't see there is I was in the background, I was scanning that QR code on my mobile banking app, but the authentication was using my Tide mobile banking app. So you'll see it's a great customer experience, incredibly reliable and secure. I'm going to show you another example now. So this example is an example of American Express acting as a PISP, a payments initiation service provider, for Just Giving. And this was used as one of the methods that customers could make a payment for Captain Tom in his campaign to raise money for the NHS. This campaign in total raised over £35 million for the NHS. It's very inspirational. I'm sure you've all heard of it. But one of the methods made available for payments was a open banking payment initiation service provided by American Express. And what you'll see here in this demo, again, a great user experience. There is no entry of usernames or passwords. All the customer has to do is select who they bank with and use their biometrics to authenticate with their face or thumb. So I'm going to show you this example now. And it's fairly self-explanatory, so I won't talk over this one. I think that gives you an example there of what I would say is a fantastic customer experience, and as I said, this is really enabled and is starting to enable not just the kind of growth of account information services, but what we're expecting to see over the coming months is a significant growth in payment initiation services, because payment via a direct credit transfer has got a number of very significant advantages over card payments or other payment methods, certainly via PISP, where the customer isn't having to enter things like sort codes, account numbers, or credit card numbers, where the customer isn't having to enter complex reference numbers for things like paying tax, for example. And as long as the customer gets that great experience that I've just showed you there, and can make use of biometrics on their mobile device, this really is, I think, a game changer, and really looking forward to how this can power even more exciting propositions.
Chris, thank you very much. Thank you very much for those two demonstrations there of a good customer experience as you describe it. And certainly as of December last year, 1 million customers had tried open banking. I always think it's more interesting to have that number of customers who've used the service than the number of API calls, because you never quite know how many of those were test calls, just to make sure it was all still working. So 1 million customers plus in December, a great many more this year, and we expect an update on those numbers from open banking in due course. Now, for our panel discussion, creating the customer journey of tomorrow, unlocking the customer innovation that open banking offers. First of all, let me welcome our panelists. We have Holly Coventry, who is Product Director, Payment Innovation, Global Merchant and Network Services at American Express. We have Mounir Mouawad, who is Head of Product Strategy and Ops at Google Pay EMEA. We have Jack Crabtree, Yodlee FinTech Engagement Lead for EMEA. And of course, we have Faith Reynolds, who is the independent consumer representative for the open banking implementation entity, a panel which is not just rich in opinion, but also experience. So let's get started. Today, we're talking about that customer journey of tomorrow. In order to create such a fantastic thing, we clearly need to put customers at the heart of product development and then actually innovate to unlock the potential of open banking for those customers. So first off, let's get a pen portrait of who those customers are from our panelists. Faith, I'm going to start with you. Which customers do you believe have been left behind? Who do you think needs to be put firmly at the heart of product development? What innovation do they need and deserve? Faith.
Thanks, Louise. So I think last year I was involved in a piece of research, Consumer Priorities for Open Banking, that looked at a new segmentation of consumers in the UK using the Financial Lives data set. And at that point, we recognised that there are around 17% of people, 17% of the population who were on the margins. So unlikely to be digitally included, didn't have access to credit on the margins. That's quite a high proportion when you think about what that means. There's 18% who are actually overstretched. So perhaps with credit products, but no real asset building, and also on the edge, so really stretched. And then a further 20% that were in the aspiring space. I think obviously we've had COVID since then. Last year, we could tell that open banking needs to stretch, and we need to see more customer innovation to reach into those groups who could get real value from open banking. And we have worked out that people who are overstretched could get the most value as a percentage of their income from open banking enabled products and services. So now, obviously, we've had COVID. That's had a massive impact. We've seen over 1.4 million people now applying for universal credit since May. And I think just looked up an interesting new tracker which said that since the second week in May, there's been 11% of households, so that's about 3.1 million households, were in serious financial difficulty. A further 17%, that's 4.6 million, were struggling to make ends meet, and 35% were at risk because of low levels of savings. So that's 63% of our households are struggling or potentially on the edge of struggling. So I really think open banking can push much more at helping people maximise their income, looking at those different schemes, improving sort of bill payments, so reducing household costs, creating a small savings buffer. So many people don't even have £100 savings, I think something like 11 million. So really open banking enabled products can stretch into those places perhaps that they haven't yet got to. Masses of room for customer innovation.
Okay, thank you. A truly shocking statistic there, Faith, that 63% of households are either actually struggling now or just about to be struggling. So a salutary stat for us there. Holly, American Express, I'm coming to you next. Your focus is on merchants and therefore their customers. What segments of merchants and therefore what segments of customers are you keen to reach? If so, who are they?
Yeah, so our product, Pay with Bank Transfer, is currently live across a range of merchants across a number of industries. Some brands that I'm sure everybody on the call will have heard of are Just Giving, as we've just seen the demonstration, Hays Travel, Lancaster University, Arsenal Football Club. So I think one of the benefits that open banking and pay with bank transfer is able to bring is that through the connection across all of the CMA9 banks, it's actually a payment product that is available to over 85% of retail accounts in the UK. So I think for us, it's all about choice. So that enables us to give our merchants and consumers choice depending on how they want to pay, where they are, and how their choice at the time, what they're paying for.
So your answer, if I've understood it correctly, is there is no particular, you have a pan approach. You want to include absolutely everybody. There's nobody who's left out from the reach of your product.
If you retail banking account across the CMA9 where we are connected, which, as I say, covers over 85% of the retail current accounts in the UK, then absolutely this product is available for you.
It's a splendid reach. Thank you very much, Holly. Jack, I'm going to come to you next. Yodlee describes itself as the leading data aggregation and data analytics platform, helping customers live better financial lives with innovative products and services created for more than 1,300 financial institutions and fintechs, including 16 of the 20 top US banks. So, you've done so much, Jack. Who do you see as being left behind? What innovation do they deserve?
I think sort of where we come from is we don't see people being left behind per se if they want to engage with the technology. I would say where people really could be left behind with Yodlee technology is that sort of percentage of people who just simply won't engage with it. So, it's really good to see people like American Express, sort of what they're rolling out at the moment to help catch those people. It was kind of where we're at. And I think also, the stat, just to go on from what Faith said, we see in the US, I think it's 40% of the US population couldn't afford a $400 expense without going to credit. If you're in that segment, that's really where I think at the moment we need to be focusing on. But then the other 60%, are still sort of in the UK, if we bring it back over here, are still sort of at risk and sort of making sure they're not left behind as well. So I would say, it's not really who's being left behind, it's making sure everyone who wants to engage in it can, to make sure no one is left behind unless they want to, well, not want to be, but unless they choose not to be.
Hey, Jack, thank you very much. Mounir, I'm going to come to you next. Does Google Pay think any customers have been left behind? If so, what innovation do you want to bring to them?
I think we've covered thoroughly a lot of the use cases around personal finance management and otherwise that can be unlocked by account information payment initiation services. I think some of the use cases that we've still not covered with open banking, and that's potentially in a future scope of the regulation or maybe commercial APIs in the future, is around the ability to access financial services in a smarter way. So especially with the newer generations and people becoming more comfortable with their finances, giving them that choice so that they have access to the best of financial services across all providers rather than being tied to the bank that they're accustomed to, is something that is not yet covered.
And which segment do you think that would address, Mounir?
Generally speaking, I would assume that this is more around the millennials and the younger generation that has that comfort with being able to manage their own finances and wanting that choice. And generally, they are more accustomed to a digital economy where they can exercise that choice more freely.
So we've got a bit of a smorgasbord there of the target segments that our different panelists are looking at there. We've already got a couple of questions in from our audience. I'm just going to pick up one or two of these now. Question for Holly. Is American Express's paid by bank cheaper for merchants than your standard merchant fees? Holly?
So it's a good question. We obviously can't share any of the actual pricing data today, but one of the benefits is that it is an economically viable product for merchants, given that the role that we are playing in it, different to card products and not just our own. There aren't any reward schemes that need to be funded through that. So I'd say it's absolutely, it's an economically viable product for merchants, but I can't get into the detail of exact price points.
You're not going to pony up your pricing plan for us on today's panel, Holly, but Mark, I think you should note, Mark Falcon, who asked that question, that Amex contends that pay by bank is indeed economically viable. Thank you for that. Mark, I think you had another question. You had a question for Jack. Jack, what is your view on Visa's application of Plaid and MasterCard's acquisition of Finicity, two other major data aggregators? Tom Blomfield Monzo says that Plaid has built open banking in the US. Quite a strong statement. Visa Plaid is currently at review in terms of that acquisition by the CMA. So that is a question for Jack.
I'm really sorry here, Mark. I know my marketing guys would kill me if I said anything other than we don't comment on any of our competitors' business, good or bad. So I can't really answer that, unfortunately. Interesting question, though, and really could be worth exploring, but I just can't answer it, unfortunately.
Well, Mark, I'm sure you're not surprised by that answer there from Jack. From Yodlee. I'm going to come to Chris. I know you're not officially on our panel, but you're very definitely here. And there was a question, in fact, came up a couple of times. So Chris Michael, how to support larger payments? These are questions coming in from Kapil Verma. Is there a future scope for a web journey associated with making high value payments? Chris?
Yeah, I think the standards are agnostic of what the payment is in terms of value, in terms of whether it's, for example, a bulk payment or a batch payment. Really what the standards enable is submission of any payment that can be processed in an existing online platform. So I think that's a kind of regulatory requirement that that exists for all online payment accounts. They need to allow the same whatever payments they allow in their online channel. What typically happens for larger value payments is not it depends if it's an individual paying it, that's one thing, but typically larger value payments might be more relevant, for example, in a corporate environment where there might be multiple people authenticating in the chain. What the standard enables is, and what most of the banks we think have implemented, is the first person who's actually in the customer who's initiating the payment, in this case via a PISP, they would authenticate, whether it's using biometrics or a web authentication, they will authenticate. That starts the process. And then what you've got typically in a corporate banking situation, you will have a process within the bank account where multiple people at the customer will have to then authenticate. There might be a chain. It might be 3 people need to authenticate the payment in order for it to be fully processed. We haven't, in the standard, we haven't defined that in any way. That's up to each individual bank to maintain the same process that they've already got. So the standard just enables the first initiation, and then it's kind of business as usual, however a bank processes a payment.
Holly, I'm going to come back to you. Mark Falcon just isn't giving up, so he's come back with another question for you here. Holly, does the American Express application show the customer's bank balance before they make the payment?
That is primarily driven by whoever you bank with. So if you bank with a bank that decides to show the balance before the payment, which I think the vast majority do, then you will see that balance. I think there's some changes going on amongst the different banks at the moment that we've seen, where some are and some aren't. So that's really not something that we own or manage, but something that the banks do.
I want to bring it back. I know I've got a couple more questions here to come. So Praveen, don't worry, I've got you. I will come back to your question. But I want to take it on now. We had a little pen portrait there of the customers that perhaps we would like to focus on. Holly wants everybody, of course. Faith has identified some very underserved segments, particularly as a function of the current pandemic. And Mounir has seen some opportunity there for millennials and younger audiences, which interestingly are not represented by the slightly elderly panel that we seem to have, including myself here today. But let's get back to our second major group of questions here. Faith, I'm going to be coming to you first again. We've identified that there's a wide selection of people that need to be put at the heart of product development and the kind of services that they might deserve. Now let's think about how we unlock the potential of open banking for those customers. I think what you're talking about, Faith, is diversification of innovation. So who's actually doing this? Who's actually creating the products that you think could serve the segments you identified as being underserved?
Louise, I'd just like to point out, I like to think myself as still quite young, vibrant. So I think there's been some really exciting innovation, and I have to say, I've been involved in financial inclusion for too long, good 15 plus years, and I think most recently through open banking is where I'm beginning to see really exciting innovations to come to market. And one of the things that I called out last year in this report was around sort of how do we bridge the digital divide? How do we help people who aren't engaged, who don't typically sort of go online? And One Bank is a new initiative which is looking at sort of addressing the problem of the decline in cash, the need to help people get online by creating bank agnostic banking hubs. And it's a really interesting proposition which enables people to go to a banking hub that's close to them, to be helped to get online with their bank account, and then also to be able to use open banking enable facilities to see what their spending looks like. And so this concept of actually providing sort of local hubs where people can access their bank without having to worry about how to get to a branch, but also to be able to use digital services and see open banking enabled services is a real step in the right direction, and obviously with that additional helping hand if you need it. So really sort of interested in that kind of concept, getting off your phone but providing digital in a new way. The other thing, and I think Mark's question is really interesting, about do the bank show you your balance before you make a payment? Many of us are at that point where we're trying to really manage our spending, think about how we can do that more efficiently. And there's a bit of a tension between merchants who want to get us through the till as quickly as possible and consumers who need that bit of help to control their spending and really understand what's going on in their account. And I've, just when talking to people locally, friends of mine who said, oh, I put all my bills out and then it's all in cash because I've got control. I know how much is in my purse. And that among people, you'd be surprised. And so there's this real kind of urgency about being able to see your balance. And we're really interested in Auto, which helps you see your balance, but in also offering request to pay. So being able to make smart payments, helping people avoid cash, but also in a way that offers people more control. So open banking really offers that facility for people to see their balance. It's a unique selling point of payment initiation services, which isn't being as exploited as well as it might be. And then the other thing is that I was sort of looking at was how do we kind of help people? I was really interested in the Calgera model. So Calgera is a new fintech that's looking at how it can use data to help elderly people spot and stop fraud from happening. But it's using this kind of alert mechanism for family members. So thinking we don't live our lives in silos. Actually, as we get older, we have, cognitive decline. We've got lots of different things going on in life, perhaps grandchildren or phone calls or whatever. And actually being able to have that sort of peace of mind, that reassurance that actually I've got somebody close to me who can also help me. So I think really interesting sorts of personalisation of products that are moving in the right direction to help different segments.
Thank you very much. Holly, so some good, interesting points there from Faith on diversification of innovation. How are you, Holly, diversifying your innovation? It seems to me you're very keen on customer centricity, giving people lots of choice on how they pay. And it also seems to me that you're very keen to access the open banking ecosystem. But I think this is your first non-card based product that you've launched in very many years. So I'm keen to understand how many years it's since you last launched a non-card based product, and how are you diversifying your innovation?
I was trying to look up exactly what the stat was, and I think it's so rare that actually nobody's even written it down anywhere. But certainly the first new payment product that the merchant business has launched in, over 20 years. And I think we are, as a company, committed to innovation, committed to delivering on what our customers are looking for, whether that's the merchant, but also the end consumer. I think that's really important. Payments is a particularly complex space. There's many people across the ecosystem. So I think, delivering really disruptive products and products that are going to resonate need to make sure they deliver across all aspects of the ecosystem.
And I think one of the things you've talked about is collaboration. Do you want to give us a sense of how you're accessing the diverse ecosystem that open banking is building up around it, and that Chris mentioned in his upfront session for us.
One thing that open banking does very uniquely is bring together a range of companies. There's, some big global financial institutions that are now able to partner with potentially more nimble, fast-paced fintechs as well. And the potential that they can bring together, given where their strengths are, really unlocks some exciting consumer propositions. One of the things that we've most recently done as a response, or as not only to what consumers are saying, but has been heightened based on the COVID situation, is we're looking at how we can bring open banking payments not just in button form at a checkout, but we're also using pay with link, pay by QR code, which will enable some traditional in-store or traditional sort of card-based payments to go to a much cleaner or contactless method as well.
A question in for you, Holly, from Amit. Amit asks, do you see PISC account-to-account payments eventually replacing the need for any debit or credit card-based transactions? In your opinion, how far are we away from that scenario?
I read a stat over last week about from Juniper, actually. He said that they are expecting the total open banking users to reach 40 million by 2021, which, given that we're July now, doesn't actually seem that far away, which is, would be great. And the current environment, I think, is actually boosting the momentum to some of the points that Faith was talking to as well. I mean, do I think it will ever overtake or replace debit or credit card? I think that's the big question out there that if anyone had the exact answer to, we'd all be millionaires. But I think, as I said earlier, our position is really to offer that choice. There may be instances where for a consumer, a credit card is the right thing to use. There's instances where an account-to-account payment is the right thing to use. So I think it's such early days that I think if I had the answer to that question, I probably wouldn't be here now. I'd be on the beach in the Caribbean.
That's what Amit is looking for. He's looking for a shortcut to a beach in the Caribbean. Thank you for that question, Amit. Right, so before I come back to some more questions, thank you for piling them in, our audience. I really appreciate those, and I will be cycling through a few in a moment. I just want to come to Jack, because let's get back to Yodlee, diversification of innovation. You enable other people to diversify their innovation. And I think in conversation, you've described it as filling in the gaps, the data gaps that open banking doesn't yet reach. In effect, to misappropriate and generally abuse an elderly advert, you are the Heineken of data, reaching the parts that other banking, open banking doesn't yet reach. Talk to us about some of the innovation that you've enabled. Give us some real examples here.
So I like the analogy of being the Heineken of innovators there. But so I think really when we look at this, it's still looking at, open banking does a great job at getting payment data in and sort of allowing you to see that. I would like to see more sort of see your balance before you pay. But there are other things as well that I think we're really missed, that sort of open banking also doesn't capture, that's really important. For us, the next sort of what we would say Wall Street caused crash is going to be around pensions, and the fact that sort of the pensions aren't there. And we do have the pension dashboard coming along, but we can't even comment on whether the two are going to be linked together and be able to speak to each other, causes us sort of a bit of cause for concern to the ecosystem, because that's going to be a huge problem later on. We're solving the short-term problem here, but I think we're missing the long-term problem when we come to look at that. A prime example sort of innovation we've really helped on top of that is then also internationally. Amit, who just asked Holly that question, is actually a Yodlee client, and it's the ability to pull Indian data on top of UK data as well and really help bring those two together. And that's sort of, again, where we see another hole, and it's going to tie to someone else's question I've just seen, in that actually, those standards aren't linked yet and may not become a common standard globally for quite some time, especially when you look at the US trying to do its own thing at the moment.
I wanted to actually come back. That was a brilliant intro for me there, Jack. Thank you. I wanted to come back to Praveen's question, which he put in right at the beginning and has obviously been waiting very patiently for us. So thank you very much for that, Praveen. I want to come back to your question, which was around the open banking standards. So I'm going to ask this question in the first instance to Chris. open banking standards, Praveen makes the point that we may have our own standards, and very lovely they are too here in the UK, but they're not lacing up together with Europe. They're not. We're not getting a universal standard around the world. Chris, I know you're not yet world dominant, but what are your thoughts around this?
This is a topic that is, very, very, very much something I'm very passionate about. I think, look, the reality is we've got several different standards in Europe, OBIE, Berlin Group, STET being the three main ones. We've got consumer data rights, the kind of standards associated with that in Australia. We've got emerging standards now in Brazil, Mexico. We've got standards that are sort of not regulatory, but are quite prevalent now in the US and likely in Canada as well. And that's just tip of the iceberg. I mean, pretty much every country is looking at open banking. The reality is they're all going to do it slightly differently. So this isn't about getting perfection. It's not about getting everyone to do everything exactly the same. But I think there is quite a lot of work going on to try and lobby new emerging markets to not reinvent the wheel. I mean, there will always be some local differences. I think the key thing that I think is really important is around the security model and how banks and third parties connect to each other. Because if you get that wrong, then you potentially put customers at risk in terms of data leakages, etc. But I think the security model is absolutely key, and something that we partnered in OBIE. We partnered with the OpenID Foundation, which is a global body and not just a UK body. So we already have got a model that's based on this global standard for security. There is quite a lot of work going on to try and work with Berlin Group and STET to try and get closer aligned to that. Australia recently announced, the CDR recently announced a slight reversal of some of their previous decisions to be more aligned to that. There's a lot of work going on now in America with FTX to be aligned to OpenID Foundation. So I think we're going to start to see movement towards existing standards, moving towards a sort of more common ground. And in new markets, it's about working with the regulators or the standards bodies in those markets to try and make sure if you're going to reinvent the wheel, do it in a, minimize the damage, sort of damage limitation. Mm-hmm. But, the other side is there are a number of large global players now, obviously Yodlee, you've got Plaid and Finicity, that, these players do, as well as a data aggregation sort of service, they also provide a sort of connectivity service as well. So that, there are solutions out there to help new emerging innovations, fintechs coming into the market to help them connect to that long tail of banks who might all be using different standards to start with. But I think it's work in progress. There's a lot of work going on to try and help align things, and just got to keep moving forward, I guess.
Mounir, I wanted to come to you on this point as well, because Google is known as an innovative company. You've indulged in innovation from time to time, but you're still at the evaluation stage with open banking. Why is that? What is it that would unlock open banking innovation for you, Google Pay, and critically for Google Pay's customers? Mounir?
You're absolutely right. We're still at the evaluation stage, which is why sometimes I feel a bit like a charlatan being on these panels, because we do a lot of assessment, and obviously we are very active in a comparable space in India, at least with our integrations with UPI. So we have a lot of views, I would say, on open banking. Now, some of the blockers so far, which Chris is familiar with, and I want to caveat that I don't want to take away from all of the hard work, the incredible heavyweight lifting that Chris and the OBIE team have been doing. There are still some issues, in our opinion. One of those issues is around the management of identity, and that breaks down into two sub-issues. The first one is around an authentication model that is seamless. What Chris showed in the initial demo is a sort of best-in-class with app-to-app redirect and what have you, and it's for biometric devices. This is a small subset of all the transactions that you can expect. Desktop remains a large percentage of commerce transactions, and non-biometric mobile devices as well. And quite frankly, banks that don't have these capabilities or such a seamless authentication flow and don't want to have it, precisely because there is money to be had in card transactions for them. There's no incentive clearly right now with, and I think one of the questions from the audience points to that, the question from Amit to Holly. So that's an issue. And then around addressing, if you look at the Nordics with Bank ID, or if you look at India with Aadhaar or UPI, a national addressing databases where you have a proxy that can be used instead of passing bank credentials around is something that would also make the experience significantly safer and more seamless. Mm-hmm. Another issue we have is around AIS, and we covered that tangentially on the panel today so far when we talk about the ability to pull the bank account balance before a user commits to a transaction. Another thing that would be incredibly useful and sort of goes hand in hand with that is event-based notification, so that when a user transacts or when an event happens that changes their account balance, whether the balance starts hitting a threshold where it's very low or frequency or whatever, there needs to be something that pushes information to the TPPs as opposed to the information being pulled and requiring authentication, you know, if you pass the 90-day window or the 4 API calls per 24 hours. So we think that these are important if you want to have a user experience that's going to be better than what you can get if you connect to someone like Plaid, for example. And we're still struggling with that today. And the final thing I'll mention is, as another sort of poignant example, is around peer-to-peer. Today, the peer-to-peer experience in the UK is, it's okay, right? You connect through your bank app, you put the details of the payee and you move the money. There's no reason why with open banking, you wouldn't have seamless authentication, which is equivalent to logging into your bank and then submitting the single immediate payment onto faster payments via a PISP call. But these are things that need to be addressed if you expect this user experience to be better than using incumbent solutions. And today we're not quite there yet.
That's a comprehensive wish list. I'm sure Chris was taking notes throughout and is working out how to make, Mounir, your dreams come true. There was a particular question for you, Mounir, from the audience. Symbiat asked, is there any future plan by Google Pay to use open banking to reach the unbanked populace of Africa? So we're moving beyond the shores of the UK and Europe here, Mounir. Comment on Africa, please.
Sure, absolutely. I think it's a great question. And I also want to start by saying thanks to Faith, because it's important to have people, even in the UK, focus on not just the unbanked, but the underbanked, because there's that nuance gets lost in translation sometimes. If you think about Africa, I mean, he's calling it open, or I don't know if it's he, sorry, but someone in the panelist is, the question is calling it open banking. What it really is being able to connect a funding source to payment trails. And the answer is an emphatic yes. There's a lot of work we've already done and continue to do for direct carrier billing in Africa, where people use their mobile phone balance as currency. There's work we're doing with you could call it closed wallets like Paga in Nigeria, for example. It's just an example. But we are looking at those funding sources for accounts in Africa. And the last thing I mentioned is that Google, along with the Bill and Melinda Gates Foundation, contribute pretty heavily to an initiative called Modeloop. I don't know how many people in the audience are familiar with it, but it's an open standard for a payment switch, which is being considered by several central banks in Africa at the moment, and which we are very keen in the future to connect into the way we connect into UPI to enable payments for the underbanked and the unbanked.
And thank you very much to the question from our audience. So, Faith, Mounir has been really clear. He's got a long list of things that he wants to have in place to get him to move from evaluation to innovation, but he's clearly aspiring to innovate furiously in this space. Faith, what would unlock open banking innovation for you? Are you going to tell me it's all about security, it's all about trust, or are you going to say, actually, yeah, those two things are important, but it's really important that we also focus on engagement? Faith?
I think there are three key things here, actually. So I think engagement's particularly important. We're looking at expecting consumers to potentially take up lesser known brands to engage in new products. That's a big jump. So we need really sophisticated products that are going to materially change people's the value that people get from them in a way that is actually going to be salient and so unique to them, but also relevant so they can slot it into their lives. So that kind of personalization and engagement is really important. But they're also looking for security and trust. I think Wirecard has been a bit of a sideways blow to the industry and to FinTech generally. It's a real kind of a challenge, especially when it hits those people who are underbanked. So Pocket, serving around 500,000 customers, couldn't get their money, couldn't sort of make payments or access their benefits. So it's a real problem. I think the other aspect is that we do need to move into open finance, into smart data. To create the level of engagement of those products, we need access to other data sources. We need access to energy data. We need access to kind of other sectoral data like loans, savings, mortgages, pensions, so that actually we get that very rounded product. But underpinning that, there must be the appropriate security, regulation, and a real kind of effort by the industry to build trust and look for active ways to signal trust, maybe offering guarantees, offering better protection.
So, Jack, I'm going to come to you with that lead off that Faith gave us about protection and trust. I mean, you're a well-known data glutton. You know, Yodlee is known for being a data glutton. I'm sure you're going to tell me it's all about access to data. You want more access to data, more types of data. It's all about the data view, all financial data, moving beyond all financial data. But is that all it's about, Jack? Isn't it about trust as well? Surely broken journeys, fixing that re-authentication journey has got to be high on your list. Jack?
You know, access to data is important, but I would almost say trust is almost more important to us. You know, we could get, you could get all the access to all the data in the world, but if you're not going to trust the system to use it, then you're just never going to engage in that model. So for us, it's, you know, open banking, and what we'd really like to see as a business is more bigger players. You know, I say bigger players looking to, you know, the world of like American Express, Google, Apple, all those sorts of players really begin to engage in that and educate their consumers on what is open banking. So then sort of other smaller sort of companies can really begin to build their user base and really help innovate that ecosystem at the same time. I think it's a sort of what comes first, and I do think trust and sort of brand is important. Of course, going back to Faith's point, Wirecard was a bit of a shock to the industry. A massive publicly listed company like that then misplaces $2.1 billion, and trust gets a little bit shattered. But I would like to think that that'll be temporary, and the premise of open banking is, you know, a government regulated activity, which will help overcome that in due course.
We've had an excellent question in, I think this one's also from Praveen. Praveen's working very hard over the course of this lunchtime. And this question was around consumer protection when developing new products and leveraging open banking. Now, the question here, I can just bring it up properly, is around speed of transactions and then that point of insertion for the scam. Mentions confirmation of payee being a good initiative that can help prevent or close off that possibility of scam. So two people I'm going to come to with this question. First, Faith, for some top spin on it. Secondly, Chris, I'm going to ask you for your view. So Praveen and his confirmation of payee eliminating or restricting the ability for the fraudster to scam us all. Okay.
Yes, I think confirmation of payee is a really important initiative. So it's not a silver bullet though. So what it does is it helps help with things like misdirected payment and with stopping people sending payments to somebody that they say is giving a different name, which deals with some scams. But I think in the UK particularly, we have a concern over people being, so with the PSD2 has brought in secure customer authentication, it becomes difficult to actually, for scammers and fraudsters to operate through that boundary. So unauthorized scams and fraud go down, but what we're concerned about is seeing authorized scams go up. So this is where a consumer authorizes a payment because they are conned into a relationship, a romance, or an impersonation. They think they're paying government, they think they're transferring funds for safety reasons, but actually they're being scammed out of money. And actually in the UK, we've been looking at a code for the industry around how they can make sure they reimburse consumers. This is a big deal in comparing cards with PISP. So who's going to pay out in the event that I've been scammed out of some money? Who's going to pay out if a merchant becomes insolvent or fails? So and that real kind of juxtaposition, that real kind of challenge, if you like, between cards and PISP, which offers better protection and which might be more attractive to consumers, is really at the heart of the kind of competitive discussion at the moment. Should we leave it to competition? Do we need to protect consumers? What's the balance? How do we make PISP in the UK work and build that trust that everybody thinks is so important?
Thank you very much. Chris, your view, please.
Yeah, so I think, I totally agree with Faith. I think, confirmation of pay helps in some situations. It doesn't help in others. And I think the key thing that I think is interesting and exciting about the whole kind of open banking PISP model is that when you've got two regulated actors in the chain, who have both got responsibilities and obligations to the customer, you've got a PISP and a ASPSP, a bank, then I think you've got much more opportunities to provide additional services that can reduce the risk and help protect the customer better. That's the theory. I think the regulations in some areas are helpful in this regard, in other areas are not helpful, in terms of some of the limitations of what data, for example, PISPs have got access to, some of the challenges that Mounir mentioned around customer experience. But at a very high level, if you've got two regulated actors in the chain, sharing of information between those, which can be done in an API flow around things like sharing IP address or whatever, then I think you can provide services that better protect customers and help reduce fraud. That's at a very high level. There's a lot more detail and nuances to it than that.
People can follow up with you individually afterwards, Chris. Holly, I wanted to come to you, your thoughts from American Express on these points of trust and security. Surely these have got to be absolutely non-negotiable for American Express. What is it you want to see?
I absolutely believe that the trust and security are a must and not a nice to have, actually, particularly in the financial sector. And all members of the ecosystem need to be able to build and maintain that trust. And to Chris's point, you do have two regulated actors working together to do that. But I think one of the things that we certainly try to do is, with bank transfer as well, is deliver on the promise. So, we promise our customers that we're going to deliver speedy, secure and simple payment experiences, and actually standing up to that and delivering on that promise is how all members of the ecosystem can start to foster some of that trust, so that we drive the consumer engagement that the whole ecosystem needs to thrive.
So a question now, thank you for that, Holly. A question for Mounir from Daniel. There's a focus in Europe and PISP. What is the role of banks from a business model point of view? Is it to act as a hub for e-commerce, for example, or is it to compete as a payment method, such as Bizum, Plink, and others? A short, sharp answer, Mounir, as we come to the end of our time together.
The short, sharp answer is that this is TBD. I would be speculating in whatever answer I give at the moment. What is certain is that open banking is sussing out inefficiencies in the payments ecosystem. And that's a challenge to some of the existing revenue models of banks, but it could also be an opportunity to reach more users with things like lines of credit and smarter ways to pay.
Thank you very much. And as we come to the end of our time together, I'd like to remind our audience, we're under orders to complete a survey which to give us feedback on how we've done. I'd like to thank the audience for all of the questions. We nearly got to them all, but not quite. You can, of course, hunt down any one of our panelists in person or in virtual person to force them to answer your questions. But I would like to thank our panelists. First of all, Holly Coventry from American Express, Mounir Mouawad from Google Pay, Jack Crabtree from Yodlee, and of course, Faith Reynolds and Chris Michael from the Open Banking Implementation Entity. And again, once again, thank you to our audience for your time and for your attention. Thank you very much and goodbye.